Hi everyone, this is Rob Roy and welcome to the Elliott Wave Options U.S. Market Update. What in the higher dollar is going on with gold? Gold's back down towards those levels that were called a mini crash back in August. Bitcoin is consolidating right around a major Fibonacci support level, and the market is testing the 50-day moving average again. It's held all year. Will it hold this time? Let's take a look at the charts. At the time of this recording, it is late on Saturday evening, so the futures market is currently closed. In the intro, I talked about how the market was testing the 50-day moving average again. So when we put the moving averages up here, you can see we closed just below it on Friday, and Friday was quadruple witching, which meant that we had stock and index options and stock and index futures all closing on the same day. Quite often that means a little more volatility, a little more volume, and you can see we had above average volume on Friday as well. Another thing to pay attention to, if we take this other stuff off, is an old expression that volatility marks market tops and market bottoms. So you can see that we've had these little days, and remember we talked about this pennant type pattern, like a diagonal here, right up to that wave 5, right at the doji, right at the top of it. And note that we've had more intraday volatility on the bars as we're falling down. So that's something to pay attention to. And so with the potential of a correction, we should look at some price levels. So if this is the end of it, the 200% extension, right under that 460 levels we highlighted in the last recording, we start coming down, we start looking at fib levels, because remember, when you have an extension greater than 100% in the wave 5, you aren't necessarily looking for a retracement back to the previous 4. So there's a little bit of resistance there at 420, so market could find some support there. And then I've talked about the 400 level, which happens to coincide with two things: this 38.2% fib level, as well as filling that gap that's been there since March. So just something to watch. If we do break down, the beginning of the week is going to be key to see if we get follow through. Our subscribers know that just this one day break here doesn't mean anything from the consolidation. We need to have a follow through, a confirmation day. We haven't had that this year with the test of the 50-day moving average. Is this going to be different? Also in the intro, it talked about gold, and here we are back down again. What's causing this drop in gold? Well, I'll show you what I think is going on here in a second, but mention that we're getting down in towards that area where they called it a mini flash crash back in August. We're not quite there yet, and we're currently just a little bit oversold with gold. You can see the separation from the 10-day moving average, but we've got a really nice Elliott wave 5-wave impulse pattern to the downside with that wave 4 right at the 61.8% fib corrective level. So it does look like potentially lower movements for gold, even though it may bounce here a little bit or at least consolidate and allow that 10-day moving average to catch up. So I hinted in the intro that perhaps it has something to do with the dollar. So you take a look at the dollar. Let's see how we're moving back to the upside here. We take a look at this. There's actually a little zigzag right there. Look at that 61.8% corrective level there. And so if we take a look at, let's go ahead and leave that on, and then we'll go ahead and do an extension. And you can see that, boom, look where the dollar hit. 100%, dead on, fulfilling that zigzag pattern on Friday. Why is the dollar moving to the upside with all this liquidity that the Federal Reserve is sending out? But are they? Is the Federal Reserve up to something? Are they not telling us something? Are they starting to taper and not focusing on letting us know kind of the hints, but actually have already started it? I think we should take a look at the fact that this Federal Reserve, even though they try to act like they're more transparent, are they moving back to the more secretive ways of the Alan Greenspan era? Because we can't track money supply anymore. There's the M1 discontinued. You can see that. M1 is basically, as you can see there, cash and checking accounts. And then with M2, they end in savings accounts and money markets. But M2 also discontinued recently. We can't look at that anymore. I used to fret about how they didn't tell us about M3 money supply anymore, which gets more heavily into institutional money markets, etc. So that's the big boys, the big dollars. You haven't been able to track that for quite a while. And then another one that people had kind of gravitated towards, which was MZM, that's actually, it's known as zero maturity. So it takes out things like CDs, that have a maturity date. So it's the most liquid of readings of money supply, if you will. They've discontinued that too, so we can't really check what's going on with the money supply anymore. Maybe that was because they were injecting so much of it and they didn't want to panic people, or they turned that table around and actually they're starting to taper a little bit and not letting us know that. That could be part of the reason why the dollar has moved to the upside. Or is the rest of the world just in that bad a shape? China has their problems that Evergrande, their number one property management company, development company in China, is really on the brink of default, and that's going to have repercussions around the world with all the banks that they're involved in. But then we come over here and look at the Nifty, which is India. We look at this a lot. We've been looking at it on our Tuesday night Trade Finder webinars. And if you haven't attended a Trade Finder, I invite you to. You can subscribe underneath the video here or go to our website at ewotrader.com. It's free. So every Tuesday night we talk about the markets. We look for trades. It's a lot of fun, so I invite you to join. But we have a lot of international viewers, so we've been looking at this market, and I've been commenting how it's been probably one of the best charts around the world. The chart still looks pretty good, and the DMI is still supportive, although that positive directional indicator is moving to the downside, even as the wave 3 had continued upside on the India's Nifty market. So we'll see how that plays out in the next week or two. If we lose that, then maybe that does have something to do with why money is pouring into the dollar. It's just global weakness around the world. We look at interest rates. We've been talking about that, and I've shared that I feel like the breakout here is going to have a lot to do with where the market goes. You can see that inched up on Friday as well. So we've kind of morphed out of this symmetrical triangle that we had and moved into more of an ascending triangle. That happens sometimes where the consolidation pattern kind of wobbles around a little bit but stays in a consolidation pattern. So symmetrical triangle, ascending triangle, still a triangle, still looking for a potential breakout. It just doesn't look like this move here is breaking out of the symmetrical triangle. You can see we're testing 14. We break back above that, then we have something to look at, and maybe that's being engineered. Slight moves to the upside, potentially supporting the dollar. I don't know, it's just a theory. We'll see how it plays out. Bitcoin, mentioned in the intro that it was consolidating right at an important fib level, and there you go. We've been zigzagging Bitcoin to death, so we'll stay with a 5-wave impulse pattern in this recording. You can see the wave 4 corrected right down to that 38.2% level, so good consolidation there. Right at a level that you would want it to hold. Looks like it's trying to move back to the upside where that has that potential wave 5 target up with, we've been talking about this with the zigzag, etc. As well, up to around 60,000. And if it's going to get that high, likely we'll test the most recent highs that it had, or the all-time highs, I should say, back into April. But strong looking pattern there on Bitcoin. At least the consolidation is right where you'd want it to be. Looking at volatility, you can take a look here at the VIX. You can see that we bounced off of that 16 level, and there's that volatility. I mentioned that it's not really that elevated yet, but it's elevated a little bit and hasn't broken those highs from August yet. If that happens, then we have to start looking at perhaps we've topped out in the market for a bit. Now, one bastion of positivity, if you will, something to hang your hat on if you look to see, hope that the market moves higher, is the semiconductor, the SMH. That's been a pretty good chart as well. Nice wave 3 pattern, a little chink in that armor on Friday as well. But look at these things here. There's another one of those diagonal patterns, just like we had in the market itself. And then if we look at the DMI, it hasn't really given a whole lot of confidence in this upward move that we've had in the SMH. So it has been moving higher in a wave 3, but that's not usually the kind of supportive ADX you see in a wave 3, which means that that's a fragile move, and that could reverse as well. So if we lose this, then we've probably lost the market, and we're starting that correction we've been looking for a while. But all that hinges on what happens at the beginning of the week. Again, if we don't follow through, if we bounce again, Perhaps we start looking at new levels, but I think we have to pay attention to some downside spots at this point in time. Hope you had a great weekend. Look forward to talking to you again next week. Take care, everybody. If you like these recordings, I'd like to invite you to join our new Trade Finder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.